promised I was going to come on and share with you the data I use to make decisions, right? I'm going to share with you up-to-date data as of this morning at 6:57 p.m. I pulled this data. And I think it's very interesting data that will allow us to make better decisions as investors. The data for the Poconos, so for Monroe and Pike County, there's a few things that make decision making easy. And one of the most important things to make good decisions is to understand what's going on. Back in 2008, 2007, I was making a lot of money before the Great Recession. I owned a mortgage company, and as you can imagine, anyone that was in the mortgage industry back then, and we were doing subprime loans as well, anyone in that business back then was killing it. Well, I was one of those that was absolutely killing it. The reason my business went under a couple months after the recession started, I'm going to say like October of 2008, I literally found myself in my garage putting my mortgage broker's license in the garbage. That's how difficult times got. And the main reason I attribute that occurrence was because I didn't understand the data. I couldn't see things coming. Data gives you clarity, and clarity is power. However, anticipation is the ultimate power. I'm going to give you a year-over-year comparison for Monroe and Pike County. Here's what we got. So as I record this, it is now April 21st. From January 1st, 2022 to April 21st, 2022, we have 981 houses, single family and or multifamily up to 4 units sold in Monroe and Pike County. 981. That's an important number. These are the metrics I look at, right? This is how I make my decision if the market is still good, what's happening in the market. This is how I manage my brain from trying to protect me and allow me to keep moving forward and making good decisions is by looking at the data. New listings on the market is 1,202 new listings on the market. So you want to take note of that, which leaves us with a net of 221. That's over the course of 4 months, guys. Just so you know, to give you some context here, a normal market in Monroe and Pike County inventory, normal levels of inventory should be 3,000. Right now, there's only 506 houses on the market for sale. This is an important number I look at when I'm evaluating the market. These metrics are extremely important. What's come on the market, what's sold in that time, and what's currently active, what's the inventory. So right now we're about 2,500 short. At that consumption rate, I did the math, it's going to take about 4.5 years for the market to get to normal levels. Now I'm going to unpack that in just a little bit because that's a long time, right? And I don't believe that that's going to be the case, but just looking at the data, that's what the data says. Just straight looking at the data says that. If we keep doing what we just did from January to April, and that keeps happening, the rest of this year is going to take 4.5 years for us to get to normal market level. The other thing I'm looking at that's extremely important is during that time, what's the average price sold, right? So as I'm flipping, and I'm a flipper, as you may or may not know, I flip and I buy and hold. If I'm flipping, I need to know what's the average sale price of the properties in Monroe and Pike County. And what I found is that the average sale price during that time period was $288,879. So 290, right, is the average sale price. So why is that an important number for us as investors? That's an important number for us as a company. For me as an investor, that's a very important number because I know that of everything that has sold, that's the sweet spot. That's the average. So that means that when I'm buying a property up front, if I want to sell them quickly, I want to stay in the average number. I don't want to go way too far up from there. Now, there's also an affordability crisis. Interest rates are going up dramatically. We have inflation. Inflation has gone up by 8.9% through the end of March. The CPI just came out, 8.9%. And I'm going to show you in a moment on some more data as to what's happened with prices and how much prices have gone up. Now, 8.9% inflation, and the average income last year went only up by 4 points, 4%. So the cost of things, right? The cost of food, the cost of everything is not keeping up with inflation. what does that have to do with us here, right? What does that have to do with us here in real estate? Well, it has a lot to do with it. Now I'm gonna show you the yearly market comparison. Now I'm gonna look at last year versus this year, right? This is important data to look at. So when I look at the data, some of the things that I look for is I'm looking for numbers of sold listings in January 2021 to January 2022. This is important, right? In the month of January of 2021, we had 304 listings sold, 300 sold houses in Monroe and Pike. In 2022, only 275. So there was a 9.5% change. It went down. In February, we had 254 in 21, 260. So then we went up by 2.4%. In March, 343, and numbers of sold in March of 2022, 306. It's kind of swinging up and down, but this is the patterns that I'm looking for, right? Here's a pattern. So if I can anticipate or try to anticipate what's coming down the market, then I can make a lot of money, or I can move, or I can change my strategy. When I look at January, medium sale price, right? So January of 2021, the medium sales price was 198,250, and in January of 2022, the medium sales price is 250. That's a 26% increase from January to January. From February to February 21, 22, you got a 27% increase. So you see high. And now you start to see a trend. From March 21 to 22, 21%. So it ticked down a little bit. So it's not growing as much anymore. In April, we have 233 to 275, an 18% increase. So what that tells me is that I'm starting to see the market level off. It's not growing year over year as much and as crazy as it was before, right? In the previous months. So that could be attributed to a few things, right? That could be attributed to inflation. So real estate is even higher, at least for here, Monroe and Pike County. The appreciation and inflation in real estate is even higher than it is for regular consumer pricing, the CPI, right? The Consumer Price Index that came out for March is 8.5. And as you see, you have for March in Monroe County and Monroe and Pike, for March, we had 21%. So that's significantly higher than what the CPI for Consumer Price Index, right? Real estate is performing. It's just through the roof. So, but the trend that I see, the pattern that my brain sees, okay, so now the last 2 months, it's not growing as much. It's actually decreasing. The year over year starting to decrease, which means it's starting to stabilize. Real estate is starting to, there's starting to be a stabilization in prices. It has to be, right? Because also interest rates are going up, right? So when interest rates go up, people's payments go up. And if people's payments go up and everything else is going up along with it, then we as investors, then housing has got to come down. Housing has got to stabilize, right? So for a $500,000 mortgage payment, if my payment at a 2.5% would have been $2,500, and now at a 5.1% is $3,700, my buyer is different. I got a different buyer. If people buy payments, people are not necessarily buying houses. I'm starting to see a trend in the last 2 months of not so much growth year over year. And I think we're going to see more of that coming the rest of this year. I don't think we're going to see a total crash because what I told you about inventories. Remember the first part I said inventory is very low, and at our current rate, it's going to take 4.5 years to come back. I don't think that is going to take us 4.5 years. If the Feds keep pushing the interest rates up at the rate that they're pushing it, I think that it'll happen, and it's just going to be a sudden influx of inventory coming in, prices dropping, because we also have the 1% rule. Just really weird times where every 1% interest rates go up, we lose 10% of value. I know I said I gave you guys a lot of stuff, and there's a lot to unpack there, but if you want to be in this business and you want to be successful in this business, you need to study the data. You need to be paying attention to the data. Because in 2008, when I was hearing things in the industry and I was a mortgage broker and things are changing, I was making so much money at that time. At that point, I had made more money than I had ever made in my career, but I was not an astute business person. I was just doing. I was just a glorified salesperson. I was out there doing deals, doing deals, doing deals, doing deals. There's more skill to be an entrepreneur, to be a business owner. There's a lot more skills that's involved. You have to be paying attention to what's happening in your market. You got to be able to protect your house. You got to be able to downsize your risk and hedge your bets accordingly. And that's what I did incorrectly. And that's one of my biggest lessons, is to pay attention to the data. If you're looking to be in this business, I hope you found value in this. Do me a favor, drop me in the comments. Tell me what you think. Tell me what else you would be looking. And just let's have a discussion on this data. Would there be something else that you would be looking at, or is there something else that I probably should be looking at? I'm totally open to that. I know I don't know everything. Totally open to getting some feedback from you. All right, guys. So I appreciate you guys watching, taking your time, and I made this a little longer than I wanted. I really wanted to make this really short, but there's always a lot to say. I always have a lot to say around the subject of real estate and mindset. So, guys, I really appreciate you guys. Thanks for watching, and I will see you guys soon.